Real estate investing for beginners. Good news, you may be able to buy a house with just $2,000 in down payments. I'm gonna talk about 1% loan, what are the requirements, what's the minimum credit score, annual income limit, and also how much can you borrow maximum, and how much credit costs and closing costs. Is everything good? Not necessarily. I'm gonna tell you 3 pitfalls that you need to watch out for when you borrow mortgage, and what to do if you don't have any down payment. Watch until the end of the video. And like most down payment programs, you don't need to be a first-time home buyer, and there's no private mortgage insurance (PMI), but you need to buy for primary residence for only one unit. You can buy one single family unit, or you can buy one apartment, but you cannot buy duplex or 3 units or 4 units or apartments more than 4. So you need to buy just one unit for your primary residence, and there's no PMI. Usually when you put down 20% or less, you need to pay PMI, private mortgage insurance, just to ensure that you will not default on your loan. And you don't have to be a first-time home buyer. There are some down payment grants programs depending on your city and your state. You can get grants $30,000, $40,000. When I used to be a real estate agent, I helped first-time home buyers get down payment grants. When you are applying for down payment grants, make sure that it's a grant, not a loan. There are some loan programs that's gonna help you pay for your down payment. They call it first-time home buyer grant, even though it's not really a grant. So just be careful. Is it really 100% forgivable? And you have to live in a house for minimum 5 years for those programs. But for this 1% loan, they do not have any specification so far. But just before you apply, you want to make sure that you can move anytime. But for now, you can apply for this loan anywhere in the United States, any city, any states, as long as you meet the following criteria and requirements. Minimum credit score is 620. If you don't have any credit card, I'm going to show you where to get your first credit cards. I got my first credit cards from these credit card companies. It was great. I'm going to give the link down below. Go to the description of any of my YouTube video, click see more. You will see my favorite credit cards for beginner. The first one was my first credit card. It was so easy to get it, and once you get some credit limit, it could be $500. Then your credit score will keep going up over time. If you want to know how to keep your credit score high and how to get perfect credit score, you can go to my YouTube playlist, click on credit playlist, then you can watch more about credit card and credit scores. So what is your annual income limit? Your annual income limit has to be less than or equal to 80% of your area median income. So how do you know your area median income? I'm gonna give the link down below. It's called Fannie Mae Area Median Income Lookup Tool, and make sure you watch the video until the end before you start testing this tool, because it can be a little bit complicated. And you zoom out, make sure you look for your area. Let's say you live in Los Angeles, you cannot drag this map, because once you click in one area, they're gonna look up that area. It's gonna show you area median income. Right now it's 100,000, 5,000, 200. 80% of area median income is 84,160. So this is in Los Angeles. Does it mean that you can buy any homes in California or Los Angeles? No, because if the house is so expensive, there is a limit on the loan amount. You can borrow only up to $350,000. So if you are buying $1 million home, 800,000, 700,000, you might not be able to borrow this low amount. If you can pay extra 400,000 in down payment, yeah, you wouldn't even need that 1% loan, right? So this 1% loan is for low income in other states, in other cities, area, and make sure you can check area median income too. Also remember that this area median income is based on your regular income. If you make too much money, let's say your bonus is variable, the lender may be able to exclude that amount. So you need to discuss with your lender. As long as your debt to income ratio meet the loan criteria, then there is some flexibility around should I exclude this income, something like that. And I'm going to tell you which lenders are providing this 1% loan at the end of the video. Another thing you need to know about is closing costs. When you buy a home, on top of down payment, you also need to pay closing costs. It can be from 2% to 3% of the loan. So let's say if you borrow 200,000, closing costs can be down payment 2,000 plus 4,000 to 6,000 in closing costs. Depending on your lender, this closing cost can vary. So make sure you check with the lender before submitting that loan applications. So what are 3 warnings that you should be careful about? Warning number 3, do not overpay for the house. Remember in 2008, a lot of people were able to get 1% loan without debt to income limit. So a lot of people were buying houses that they could not afford. They overpaid the house because the house prices just kept going up. So they just kept buying houses. Once it crashed, they could not pay their loans. So do not overpay. Even though you only need 1% down payment, make sure you are buying at the house that you really love to live in for the next 5 years, 10 years, and also good location. In real estate, locations. It's very important to have good locations that could cause the house to go up in price over time. And warning number 2, ask if you can pay off the loan sooner. In any loan applications, you must ask, can I pay off this loan in 1 year or in 2 years? You don't want to be waiting until 15 years, 30 years, because you will be paying lots of interest. Usually it's double the house value. So if you borrow 200,000, the interest can cost up to 200,000. Sometimes it can be more depending on the length of the loan. So make sure you ask, I want to pay it off sooner in the first year, in the second year. Can I do that? It is very important. And warning number 1, make sure you are borrowing fixed rate mortgage loan. Right now the interest rates are going up, so you don't want to be borrowing variable interest rate loans. So if you borrow variable interest rate loan, if interest rate goes up, you need to pay higher interest. You don't want to do that. You want your payment to be predictable, the same every single month. So make sure that you are borrowing fixed rate mortgage loan. So who are the lenders that offer 1% loan at the moment? It's Rocket Mortgage. Rocket Mortgage is providing 1% down payment option right now. Do you know why they do that? Because a lot of people are not buying houses. So these lenders, they need borrowers to make money. When people borrow loans, they make interest payments. So they get profits from making loans. So they are giving incentive, no PMI. Also, Rocket Mortgage is giving you 2% down payment grant. So basically, when you borrow money from Rocket Mortgage, they are gonna pay 2% of your loan in grants, and you just need to pay 1% and no PMI. So before applying, make sure you consult with your real estate agents if this is a good option for you, and consult with your mortgage officers. You just shop for the different loan officer before you take this loan. Make sure you ask 3 questions that I just told you. And another lender is Zero. Zero may not provide 2%. down payment grants, but they are giving you option to just make 1% down payment option. You can go to their website to apply for 1% down payment option, and you can know more about this as well. It really doesn't matter which lenders offer you 1% down payment option. Make sure you ask the same question and make sure you have enough money. Make sure you not gonna lose your job in the next 5 years or 10 years. What to do if you don't have down payment? How to save and invest for down payment? You can just save $10 a day. After 6 months, you will have got $2,000 in down payments. If you just save $10 a day, after 10 months of 300 days, you will get $3,000 in down payments. So it's very easy. Do not smoke, do not drink alcohols, do not waste money on unnecessary things, do not eat out. Just make yourself dinner or lunch at home, then you will save a lot of money. Do not buy cable TV, do not buy Netflix, just save money. Just suffer for 6 months or 10 months to be a homeowner. Or you can start investing in stocks or stock options or advanced option. If you want to get started, click the link down below in the description, open an account and subscribe my channel, share this video. Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now. If you want to know more about finance, stocks, options, real estate, crypto, check out our playlist. Stock investing, stock trading, option trading, real estate, cryptocurrency.